Hello and welcome back to the Wealthy Wellthy Podcast, where we explore the intersection between health, wealth, and entrepreneurship. I'm Krisstina Wise, your host, and today we're leaning into the wealth side of that trio. Today I'm sitting down with Richard Canfield, author, podcast host, and one of the top experts in infinite banking concept. Richard was personally mentored by the late Nash himself, the father of infinite banking as a wealth creation strategy. Richard carries forward Nelson's philosophy that creates freedom isn't about chasing the next big investment. It's about how you think, behave, and steward your money. This conversation goes deep into how something as unsexy as whole life insurance can be used as a powerful capital building tool, why infinite banking is as much about values and legacy as it is about finances, and how to create a family banking system that ensures your wealth lasts for generations. If you've ever felt frustrated depending on traditional banks, want to become your own bank and banking system for your family, or wondered how to build and leave a family legacy, this episode will open your eyes to a radically different way of thinking about your money, one that could change not just your life, but your family's future. Please enjoy my conversation with Richard Canfield. Richard, welcome to the Wealthy Wellthy Podcast.
Krisstina, excited to be here with you. Looking forward to some fun today.
Yeah, this is my favorite thing in the podcast world. We call it pod swaps, and it's where we as peers, mentors, friends, we say, hey, I'll be on your podcast if you'll be on mine. And so I had a great time being on Wealth on Main Street and spending time with you and Jason. And I love your work. I love your message. So first of all, thanks for inviting me to be part of your podcast, and thank you for reciprocating.
Yeah, I know. Happy to do that. And it was an awesome experience and interview having you on there. And, I really appreciated the stories that you kind of shared that are both real and true and raw. And, obviously your listeners get to experience that on a regular basis, but it was really awesome to have you on our program. And I think you made a really great impact for the listeners that were able to take in that session.
Well, what's interesting about me being on your podcast is that, so we're going to talk about, for everybody listening, something called infinite banking. And, maybe some of you have heard of it. Maybe this is the first thing, yes, that comes from Become Your Own Banker by the late Nelson Nash.
R. Nelson Nash, yeah.
R. Nelson Nash, yes. And so what's interesting about being on your podcast is that most of what I teach is more financial fundamentals and money management, cash flow management, and profit first, and lots of money concepts. And I talk a little bit about real estate investing here and there when asked, because I'm a real estate investor, and that's really how I've built my net worth. Rarely do I ever get asked or have an opportunity to talk about infinite banking. So very few would ever know that I use infinite banking as part of my wealth strategy and legacy strategy, and have done so for a long time. It's pretty silent as far as me speaking about it. So being on your podcast was a lot of fun, because you guys, by asking questions, I'm like, oh yeah, let me tell you a story about this, or let me tell you a story about that, like I said, I don't get an opportunity to talk about. But this is not about me. This is about you as an expert in the infinite banking system. And I'll tell a little story just to get us started, and then I promise the rest is going to be about you. Is that I was introduced to Become Your Own Banker and whole life insurance, kind of this infinite banking concept, kind of by accident. A friend of mine had said, hey, because I was a real estate investor, and his name is Darren. And Darren said, this was many years ago, probably 15 years or so ago. He said, you need to read this book, and it's called Become Your Own Banker. It's right up your alley. It's everything you believe. And it's this thing called whole life insurance. And I just thought he was trying to sell me insurance. So I ignored it. I didn't think about it. That book sat on my desk forever. And one of those things, I'll get to it one day, but I just thought, oh God, now Darren's selling insurance, not even interested. I was flying to San Francisco. I had a business trip to San Francisco, and I needed something to read. This was back before, you had your mobile devices. You actually took books on the plane with you. So I didn't have any other books. So I grabbed it off my desk on the way to the airport. And I said, I'll just read this damn book on the airport, because I promised Darren I would read it. So I read the book on the way to San Francisco, and then I read it again on the way back. And it was just one of those books that was life-changing, like reshaped the way of thinking. I'm like, how did I not know this? And that book sat on my desk for probably like 3 years before I picked it up. So anyway, it's like reading Rich Dad, Poor Dad for the first time, or some of these other books where it's like, my God, this is a totally radically different way to think, and it's just a better way. So that was my introduction to it, and, ever since then, I've been, a fan of that work and have, did my best to employ it in my strategies. But to start out, Richard, let's tell the audience who you are, why you're here, and what got you into this whole world of infinite banking and whole life insurance as a vehicle.
Well, first of all, I love your story, and so for your video listeners, I'm holding a copy of the book, and this is my original copy of the book. Now, anyone on audio won't see, but you'll be able to scan. There's a lot of highlighted sections and everything there. There's not a page in this book that doesn't have different colored highlighters on it and notes. I'm at a point now where I got my copy in August of 2009. And now I write notes and dates when I go through the book again and I learn something that I already knew. I've read it. I've read the book, hundreds of times, but I'm like, oh, you know what? I wasn't looking at this or thinking about this particular area this way before. And I'll make a note and a date where something sparked for me that was different than a previous time I've gone to the book. So that literally this book, Become Your Own Banker, becomes a gift that keeps on giving. And in the way that you said you read it twice, this particular book in my hands has probably racked up more frequent flyer miles than most human beings have because it travels with me on almost every flight that I go on. And it is, if the house was burning down, other than, some core elements and make sure my family, once my family's safe, this is one of the number one things I'm coming back in to get. And Nelson Nash, unfortunately, he passed away about 5 years ago, and we miss him dearly. But I have signed copies of this book. This one is my signed copy, and I have a signed copy for each of my children. And they know that they will be receiving those books once. Number one, they've proved that they're worthy to receive them, that they've received Nelson's message, and they're ready to incorporate themselves into the family banking system, which we talk about regularly. We actually have annual family banking meetings to discuss that. My kids are 7 and 9 years old. We've already been doing that for about 2.5 years. In fact, we just had one recently. And so they need to demonstrate certain habits and behaviors before they'll ever receive their signed copy of Nelson's book. And they each know they have one. I shouldn't say they never met Nelson. My son, when he was about I think he was about 6 months old, 7 months old. I have a picture of Nelson holding my son. And so he was able to meet Nelson. My daughter wasn't. Yet we have a documentary film that we were involved in helping to make with the Nelson Nash Institute, which I'm a member of. And that documentary film, it's called This is Nelson Nash. It's only 1 hour long. Great use of your time if you ever get a chance to watch it. There's a point where Nelson is signing books at a table, and the book that he's signing is actually the book he signed for my daughter, Nora.
Wow.
So it's hard for me not to tear up every time I see it. But I miss Nelson. He was my friend and my mentor, and I loved him dearly. He truly reshaped every fundamental aspect of my entire existence, my whole being as a human, and the knowledge I have, the things that I think about. So it's not about whole life insurance or just financial aspects. It's about a way of approaching life and thinking about things in longer term horizons beyond your own lifespan, doing things differently, bucking the trend. um, for me, one of the things I like about it, there's a little bit of sticking it to the man that's involved there, which I appreciate. So, if anyone is maybe thinks that, Nelson used to say, "Look, do you ever have the gut feeling that there's something fundamentally wrong in the financial world that we live in, and that maybe not everything is set up to put you in a successful position?" Well, if that's the case, he would say, "Give me $20 and buy this book." Okay. And in 92 pages, so going back to what got me started, Christine, and thanks for the question. So my partner, Jason Lowe, he's my partner on our podcast, Wealth on Main Street. We've written a number of Amazon best-selling books, and he and I co-write those books. In fact, we're working on one right now to be released soon. It might be out by the time this airs, called Grow Your Own Capital. It's a book for farmers about farm transitions, farming legacy, keeping the family farm in the family and doing it in a way that's sustainable. And we're also going to be releasing a book written by some teenagers, Jason's son and his nephew, who have been practicing this concept, attending family banking meetings, and they've written a book for teenagers, by teenagers, about how simple and easy this concept is in the modern world. And we're going to be releasing that soon. It's called From Diapers to Dollars. So that's coming out in a couple months. And we're excited about all these because none of these replace Nelson's book, Becoming Your Own Banker. They're all add-ons and complementary elements to say, look, here's a perspective on what we learned from Nelson through applying it in our own lives. Here's Nelson's is the core message. It's that foundational level. And now we're just kind of adding rooms and hey, let's put a banquet room over here. That's going to be this book. We're going to put the theater room over here in the back corner of the house. That's going to be the teens book. So this is kind of how we're approaching helping spread Nelson's important message about financial freedom, financial stewardship, financial legacy, which is not just based on dollars and cents. Legacy, people hear that term and they often recognize that, well, that's how much money I'm going to leave behind or my estate value or something. No, no. It's the mindsets and the value system that you're going to pass on, which then therefore allows the continuity of money to continue. If we don't have that value system and the mindsets and the right behaviors in place, then the result, whatever you leave behind, whether it's jewelry, dollars, gold, Bitcoin, real estate, whatever it is, none of it will stay there or be sustainable without those fundamental elements. So Nelson's book, 92 pages, 30% of that book is based on human behavior. And if we can't accommodate and isolate the core elements of the human behavior, no money in the world will get us anything that we want because we're always going to be spinning in this endless loop and cycle. So we have to get our behavior and our thinking in the right zone. Nelson, sorry, I get really wrapped up when I talk about Nelson, but when he would start every training session that he would do, and he toured all over US and Canada delivering seminars, a 10-hour seminar, Friday evening, all day Saturday. He would do these, sometimes hundreds of them a year. And he would travel all over to do them. And he would be sponsored by folks like myself. And he would do it to small groups of 10 people, 30 people, 50 people, 100 people, or however many people were there that were willing to listen, he would show up. And he would drink hot coffee all day long. And for a guy in his 80s, he never stopped. He was an absolute machine. And he would start every session with, Krisstina, you see, it's all about how you think. It's all about how you think. You see, it's all about how you think. He would repeat the thing 3 times, but he would emphasize different elements of what he was saying to change the meaning of the same words. And so just in the statement alone, he was creating a method of thinking within your own mind. He was changing the thoughts in your mind, not to influence them, but to get you into a position where you are in the headspace to be able to be open to receive information and ponder it in your own way, if that makes any sense. There's a really unique and powerful thing that he did. He was a master at it, truly. So I miss and I love Nelson, but I got my copy of the book in August of 2009. Jason said, Richard, go buy this book. So I literally went on Amazon and I bought the book immediately. And at that time, there wasn't an Amazon Canada. It was only Amazon.com. And so I had to pay. I remember I got the book. The exchange rate was pretty crappy from US to Canada. And then I got an extra bill like 3 weeks later from FedEx or something for some customs charge. The end result is it cost me almost $50 to get the $20 book in my hands, Canadian. But what was so powerful about that is for that $50, I had received a better financial education in the 92 pages of the book, Becoming Your Own Banker, than I had received in the over $10,000, $40,000 I'd spent in the previous 10 years of my life, attending real estate seminars, personal development sessions, all these financial gurus who were telling me all the amazing things you could do about offshore corporations and this and that, and all these amazing things that were possible, private lending here and lease option strategies and all these great things that I learned about, which were valuable. But not a single one of those people I'd spent all that money with told me what was in the 92 pages of this book. And I sat there and I thought to myself, this is almost criminal. What is it that, how is it possible that none of those gurus who took all my money, and I'm happy to, they provided value, so I'm not upset with them. I made the decision, I made the choice. But how is it that they didn't know what Nelson knew? And if they did know, why on earth were they hiding it from me? Neither one of those was okay. And so I came to the realization very quickly after reading Nelson's book that number one, I was angry. Number two, if my parents didn't know this and none of these gurus knew it, well, I can't go out tomorrow and say that that is the case because now I know. Once you know something, it's very difficult to unlearn it. Unlearning is twice as hard as learning something new. There's no rewind the tape situation. So I felt compelled and a responsibility that I didn't want other people to have the feeling that I had. So that means I needed to spread the message. And that's kind of how my journey started in this process.
Wow, what a great story. There's so much to unpack there. A friend of mine, Hina, I don't know if you know Hina Khan, but if not, I need to make that introduction. She studied with and under the late Bob Proctor. And Bob Proctor is for, any of us in the personal development world, probably listened to tapes, CDs, something from Bob Proctor. So early
He was
in
a big
my
guy with a booming voice.
yes, I mean, when I first started my career and first really got into being an adult, Bob Proctor was a very big influence because I grew up in a space where, that was like mind blowing. So, I just always think, man, how fortunate to be able to study next to and spend time with Bob Proctor. And now listening to you, I'm thinking that same thing about you is like, wow, I didn't really get that about Nash, that he was just legendary and just principled and deep. And sure, he's talking about a financial instrument, but it's so much bigger than that. It's about how to think, how to be, how to act. Very philosophical and meaningful, it sounds like. So, what are some things before we get into a little bit more of the nuts and bolts of the IBS? What are some things you learned from Nash, like working up close and personal with him? Like, how did he develop you? That is part of, like you said, legacy is what we pass, who we become, and what we pass down beyond just the money and technology.
A really good question. I mean, there's a lot of things that I can unpack there. A couple of things that stand out is number one, watching Nelson deliver a talk or a presentation to a group of people, whether it was the general public or a group of like financial advisors and insurance professionals. He so first off, he was very consistent. He had, developing mastery, you have to have like 1,000 reps at something to develop this mastery. And so he had that. And so he could call things up at this unbelievable degree, even, at a late stage of life. Now, Nelson passed at age 88, but yet in the late 80s, I believe it was in 1987, he had quadruple bypass surgery. And when he had the quadruple bypass, and he took the concept of a heart lung machine, which is what's necessary to continue the blood flowing through your body to keep you alive so that they can perform the procedure to replumb everything in four places. Quadruple being four, got to replumb everything and put it back in. And so the heart lung machine keeps blood flowing through the brain and all the major organs, etc. And the whole purpose of that machine is simply to maintain the semblance of life to perform an operation over a period of time. Nelson just thought about that and he said, well, I can utilize that. And he said, the world, humanity, everyone operating their day-to-day life, they're effectively operating their financial life on the equivalent of a heart-lung machine. They're barely surviving. It's just enough to keep them going, but not enough to make them thrive, essentially. And so he would use lessons from real life like this and these analogies that were just so powerful and core elements to get people to recognize. And he would train on these types of things. But the way he would weave them through real life stories was just so meaningful and powerful because they were true. But he would also blend a great deal of comedy in it. And he would have me laughing in stitches at these events, and I'd watch him. And I'd heard the joke before, but it would still get me every time. He in his book, he has a whole section about equipment financing, and he uses an example of a logging business. The reason he uses it because he comes from the forestry background, and there's a lot of high equipment cost and needs in a logging business. You need big trucks, you need semi trailers, logging trucks, you need all these things. You need Caterpillar tractors, and he'd say, well, a D8 Caterpillar tractor used to cost $50 a pound, and they're 50,000 pounds, and so like he would use these simple analogies for people to do things. And he tells the idea of learning how to self-insure for collision coverage on a vehicle as an example. And he has that in the book. But he would use an example of watching the Space Channel on TV after he delivered a session one night. He doesn't normally watch that stuff, but these two, Martians are flying around when they're in their spaceships, and they got ray guns. We don't have anything like that. It's super powerful. All of a sudden, they look down and say, "Well, what's that thing over there?" Zap. Well, then Terry, my nephew Terry, looks down and he's just got a molten pile of metal for his logging truck. Well, that's the definition of a total loss. So if you're self-insuring, what do? You call up your life agent or the insurance company. You say, Martians got my truck last night. I need you to send me a, $52,000 policy loan so I can go replace my truck. Right. And so he would connect these just very interesting stories into a way to teach these powerful lessons. And he was a master at it. But here's another thing that I really appreciate about Nelson. He was a very devout Christian. He thought that was the most important thing, and that, before talking about anything else, we should talk about that. That was his belief. But he got married to his wife Mary. She's unfortunately already passed along as well, and she was a wonderful human being, and she would often attend these events with him. But they were married for, I believe, like 60 years, 62 years or something, really long time. And so some of the last conversations I had with both him and Mary over dinner and whatever were really around the things that made their marriage strong, what helped them and allowed them to get through lean times, that sort of thing. And so Nelson loved life, and he loved to learn, and he loved to read. He was such an avid reader. The last time I was at Nelson's house, he had this circular, table in his den, his office, and the wood was like 3 inches thick. It was like this big, thick kind of oak table, and it sat about maybe 18 inches or so off the ground. But it was a pretty big. It was about 4 feet round. Like, it was a pretty big round table. Every square inch of it was stacked with books, and most of the books were over an inch thick, and they all had Post-it notes coming out of them where he'd flag things. And Nelson was at the stage of giving things away. So if people came over to visit him, he had pre-picked out books for people, and he was mailing books to people with the sticky notes and a letter or a note that said, "Hey, I picked this book for you, and here's why." And then he would say, I remember I got a book from him one time in the mail randomly, and inside, there wasn't a note, but I reached out and I called him. And I said, "Oh, Nelson, thank you so much for the gift. This is great. I can't wait to read it. Hey, what prompted you to send me this book?" And Nelson would say, "Well, Richard, I'm just looking for high quality seeds and planting them in fertile soil. And I think you're fertile soil."
Wow.
And so he would use these analogies to connect with people. And that's the kind of individual that inspires others, has meaning in his life, cares about his impact in the world, and knows that one person can make a difference.
How did he stumble upon whole life? Like, how did that fit into this whole philosophical, meaningful again, he reminds me of, like, the Bob Proctors or these others in the world that were just so grounded in their craft and their knowledge and their orating skills and just was, like, put on this earth truly to make it a better place and to shift things, like, uh and when I listen to you tell these stories, it's like I'm putting him in this category of these individuals who have made that type of difference. But he's relating it back into this banking system and to this very specific financial tool. So how'd that come into play in kind of this bigger message of just how to be a good human and how to be prosperous?
It was a super good question. I actually love the thought process there and why that's important, because a lot of it does begin there. So, whole life insurance is simply a tool. A tool is just a tool. You need a shovel to dig a hole. You need a phone to call 911. You need a tool to do a certain job. Now, when you're traveling, you can travel by walking with your feet, a bicycle, a motorcycle, a scooter, a quad, a car, an airplane, a helicopter, like a boat. There's all these modes of transportation. But if I'm going, down to Seattle and I live in Vancouver, yeah, I could get on a boat and do that because it's on the coastline. But if I'm in the interior somewhere and I'm trying to get from Edmonton, Alberta down to North Dakota, a boat's not going to help me. It's not the right mode of transportation. It's not the most efficient vehicle, if that makes sense. So all whole life insurance is well structured, properly designed, with someone who knows what they're doing, with the right type of company, is simply a tool to get the job done, the job of becoming your own banker. See, one thing, Krisstina, that people don't understand is that they're already their own banker. They just don't realize that they have the control if they take over it, and they've abdicated that responsibility to someone else to perform the function, because it's happening every day in your life. It's already happening in your life. You just aren't aware of it really in the background. And that awareness, it's like Neo in the Matrix. All of a sudden, he's aware of what's going on around him. Once you become aware of it, you start to see things differently. So Nelson, he was an avid learner, and he was both an airline pilot, a forester, trained as a forester. Foresters are trained to think long range, because you can't build a forest to create a long-standing constant stream of income if you don't have 40 years to plan. So he learned how to plan in generations through his training. That long-range thinking applies directly to human lifespans. And you realize that there's things that you can do, and you can learn and plan and think intergenerationally. So one of the first things that he says in his book is learn how to plan and think beyond your own lifespan. Well, once you can understand that that's even possible, your whole awareness of what you're able to do actually shifts and changes. It's amazing how the mind works. And the other thing that really connected with him is Austrian economics. So there's three primary schools of economic thought. There's Keynesian, which is what the bulk of the world works on with central banks. And it's basically, fundamentally, it's the idea that you can borrow yourself into prosperity. Hey, don't worry, we need to spur the economy. We'll just create fake money. We'll borrow it, a big amount, and that'll get everyone working and operational, and it'll spur the economy, and everyone's happy. Well, that reality creates what's known as the boom bust cycle. Okay. It creates a manipulation of interest rates. And so then that leads to a big boom. And then the market has to correct because we falsified the information in the market. And then there's a big bust, boom bust cycle. And so then there's the Chicago school, which is more to do with Milton Friedman. It's a little bit more free market, but there's some other aspects to it. And then there's the Austrian school. And it's called the Austrian school because the main thinkers originated from Austria. Ludwig von Mises, the Mises Institute, etc. There's great think tanks. A really powerful one is FEE.org. FEE, it's the Foundation for Economic Education. Unbelievable great resources there. And Nelson read a magazine that they used to produce called The Freeman. And that magazine, when he read it, he went back to the guy who gave it to him. He says, "Where have you been hiding all this stuff, and why have you been keeping it from me?" And the thinking and the mindset, and it, this is very libertarian oriented, but it's very much like free markets. But also, you have to allow the market to do things, and it's built on the idea of human action. So economics, people often think is related to money, but economics is really related to human behavior. And that human behavior element underpins everything else that's happening. That's really what it boils down to. So Nelson took these elements of his forestry background, long flights over, boring tree lines, pondering in combination with Austrian mindsets. And he then eventually got into the life insurance business. And through the combination of all those confluence of things working together, he started to realize things and think differently than other people. And whole life was always popular. It's only in the last 40 years where it somehow became unpopular. Especially during the 80s when interest rates, spiked, and you could go and put money into a savings account and make 15% without having to think about it. That changed the dynamics. And then as the baby boom needed more access to financial tools and people in companies stopped having, proper pension plans to support those people, the whole financial marketplace blossomed that didn't exist before. It's a confluence of events taking place here. And so eventually the whole life insurance, which was a primary savings vehicle of the average North American citizen, for all the way up until basically the early 70s, it was a primary element. It was involved in almost everyone's financial piece of their core component. It fell out of favor, and other things began to take hold because there was all these new markets available. But it's always been there, and it's always stable. It's literally one of the most stable, predictable financial assets on the planet. And what people didn't understand, though, is how you could utilize it. So there's a tool, and if a tool just sits on the shelf, it's just a tool sitting on the shelf collecting dust. But if I have a chainsaw and I go and take that off and I go and cut down a tree, and then I turn that tree into logs, and then I do that several times, now I can go and sell chopped wood, and I can create a business. So I could take that tool and I can turn that tool into productivity. That is the thinking that Nelson brought to the implementation of the tool whole life insurance. So the infinite banking concept is a concept of thinking. It's a way of doing things. It becomes a lifestyle, but that lifestyle requires you to take on some learning and some effort. By the way, you're doing those things anyway. You just may not be doing it effectively. And then with the utilization of a well-structured whole life insurance policy as a storage vehicle, a storage machine. It's a storage facility for wealth. What's accumulating in there, which you can, I won't say the word manipulate, but you can have a higher degree of control over, if you do it right way, can allow you the ability to access capital using the insurance company's money, which you co-own, so your money never comes out. It's always growing in permanent motion. And I can access what's called a policy loan, and I can take it to do anything else in life I want, like pay my annual tax bill, invest in a piece of real estate, fund a renovation to make a house into an upstairs and a downstairs apartment, so I can have two sources of cash flow. Put on a garage suite. I replace the furnace, put on a heat pump, go and invest in creating books, which, by the way, here's our book, Cash Follows the Leader. Here's our most recent book, Don't Spread the Wealth, all about family banking meetings. These books cost us on average between, I would say fifteen to $20,000 to produce. And it doesn't have walls, but if I can sell, $100 to $200 a month worth of books, plus, a little bit more on the front end when we launch. And then over time, I've replaced that cost of that book. And now I have a permanent stream of ongoing cash flow, not unlike a piece of real estate. So, like, this is an example of the type of quote unquote investment I would look at doing with a policy loan. So, whatever you need money for, you're going to get it from somewhere, a storage facility. It's either going to be your bank account, your investment account, a policy that you have control over, which is in constant motion, equity in your house, or you're going to borrow from someone else's pile of money. You're going to pay a premium in interest and fees and a penalty of pain to apply for their money so that they'll give it to you. You have to prove to them that you don't need it for them to say that they'll give it to you. And it's a painful process. I'm sure everyone listening has had to go through it. It's a huge, depending on your situation, especially if you're a business owner, man, it's a pain in the butt. Real estate investors, they hit the wall all the time. So you always have to jump through someone else's hoops to get access to the gold. He who has the gold makes all the rules. Well, it's either that or you deplete your own resources and drain them down, which means you lose interest potential, compound potential on every dollar you do that with, so that you can accomplish the thing you want to do. Well, in Nelson's method, he simply solved that process by saying, well, if we first capitalize a machine and we let that efficient machine operate so it's always in motion and it never gets stopped, and we can access at will with no questions asked, with 100% control over all the terms, capital from the administrator of that machine, which just so happens to be the life company, and we co-own them, so they pay us annual profits, but we can still go do the thing that we want. Now we've created an incredible potential on all of our financial decisions.
So
I get a little
to
wrapped up, Krisstina. I'm
No,
sorry.
I
I'm
love
excited
it.
about this.
The only reason I'm silent is because I can ask 3 questions at once, and I'm trying to think, okay, which direction do I want to go here? The first thing that comes to mind is you say a word called capital, and I teach this word all the time, especially in my business course. And wealth, a lot of wealth creation, at least creating wealth with velocity as opposed to just putting in the market and waiting 40 years for that 8% to actually start mattering at 31 years, is really connected to this word called capital. And so when to really become a wealth creator as opposed to waiting for time to create wealth, I've associated that with capital. And there are different forms of capital, but when we think of financial capital, if you're going to go start a business, it needs to be capitalized. If you're going to go buy a piece of real estate investment, it has to be capitalized. Means the money has to come from somewhere. And it's either cash or debt. I mean, it's basically one of those 2 things unless you're getting somebody else to pitch in. But either when it comes to personal, you're using your own cash or to capitalize the new business, the new book. If each book's going to cost $25,000, it's like, am I going to deplete $25,000 of cash to write and publish this book to get it there? Or it's debt. That, hey, am I going to borrow this $25,000 to do this book and then hopefully be able to pay that back with the book proceeds? Those are 2, but the word there is capital. And when we're not trained in the word called capital, we can't think in terms of money, to use money as capital to fund future opportunities that will turn into a return that makes that a really good use of capital. That's typically what's in our way, is that we don't have access to capital. We don't have the cash saved or don't want to liquidate it. Or 2, like you said, if you have to go get debt somewhere, the banks make it practically impossible. I told a story that I couldn't get bank capital for a silly loan for my son's $13,000 car because of my tax returns. But like you said, you have to jump through all these hoops and prove that you don't need the money before they'll give you the money. And so you miss opportunities by having to go through that whole system out there. So to have access to capital and using whole life as a tool, I think what I hear you saying is that using this whole life insurance, this thing called cash value, is that it's access to capital that I can go get $300,000 of capital, go put money in a real estate development and have it in my bank account in 48 hours. That's how, like, no jumping through any hoops. It's just like waiting for, a few little paperwork. And I just go online, fill out the form, send it a couple things, and voila, the money's in my bank account.
And
So
it's liberating.
And it's liberating, and it's just, like, so simple, and I almost forgot, like, what the traditional banking system is. So, yeah, it's a one is the tool, like you said, and understanding how you can use whole life as a tool, but also the thinking, like understanding capital, understanding wealth creation, understanding money in, like you said, these different terms and way to think about it. That is the difference between, would you say, just the being on the life support system as opposed to, you know, thriving. So anything to say.
Living lung machine. I'm
Yeah.
glad you mentioned capital, Christina, for a couple of reasons. I believe it's mentioned about 26 times, the word capital, in Nelson's book. A friend of mine, Ryan Griggs, who's also an authorized infinite banking practitioner, he's an Austrian economist. He's doing his dissertation, I believe, on Austrian capital theory, and leveraging Nelson, what he learned actually is a big component of that. And there's a couple things that people should understand about capitalization. Capitalization is required for everything. If you've got a university degree or you've got an apprenticeship, you had to capitalize. That means you either paid money to pay for the courses and do it. You didn't make any money when you're there. The whole purpose was to capitalize an education through the time, effort, and energy to be in a position where you could, in theory, make a greater income, which was the thing on the other end. So you can't circumvent that time. That's no different than starting up a business that you want to be profitable. It might be, maybe if it's profitable in year one, it has to be profitable for a number of years to recover the original capital that went into it. That is a capitalization process. An insurance policy goes through the exact same thing. It's common in everything that we do. And understanding that fundamental, buy a piece of real estate, sure, it might cash flow right away. Maybe you can borrow out and get a bunch of your money back, potentially. But in that case, you're still dealing with borrowed money. And now you have to pay those guys. And then your cash flow goes down once you do that, typically is the case. So typically in a buying a whole piece of real estate, you're not going to get your capital back for 5 to 7 years of ongoing cash flow and resources. And by the time you get there, now you have deferred maintenance. You got to put more capital in. So really, if you add up all of that, it could be 8 to 10 years before you're kind of neutralized on what you put into the deal. That's a typical long term. That's on the app. Here and there, buying right, you can manipulate those numbers. But if we put some averages on it, it's kind of like that. That consistency exists in most of the things we have in life. So it shouldn't come as a surprise to people that it's necessary. You have to go through a capitalization period with almost everything that you do.
Yeah, you do. And it's just, again, it's a powerful way to think when you start thinking that way. All right. In lieu of time, I'd like to maybe um, look at whole life as these through these two pieces. And one is just, again, for everybody listening, we're talking about whole life as a financial tool to be able to have life insurance, meaning a payout if you die, a guaranteed payout in the case of whole life insurance. And two, other opportunities to be able to use the policy as a tool to be able to use it as capital, to capitalize anything you want to capitalize in your life. So I'm going to put that in the becoming your own banker conversation. Is that the way to think? And that's what was this light bulb moment when I read the book, was like, oh, right. The money's coming from somewhere. Like it's even that, you could pay cash for a car, and then there's the opportunity cost of not having the cash in the account. So, like, everything comes at a price, and the trade-offs, because I was all cash at the time, probably before reading Nelson's book. After being so much in debt and going through that whole thing, I ricocheted to the other side, where debt is terrible and stay out of debt, and very kind of Dave Ramsey-esque type things. I'd been burned so bad by getting in too much debt early on. So, but that's way that Nash had reshaped my thinking, like, oh, he's got a really good point there. But that was where it's like, okay, become your own banker, and using that as a philosophy and a way to think, and then whole life can be a tool. So would you talk a little bit more about what does he mean by becoming your own banker, and that, and kind of getting out of the reliance on the traditional banking system?
Yeah. So with the process of doing this, again, it's very mindset related. So if you wanted to, we use cars as a great analogy because everyone's listening is driving a car. Maybe you're even listening to this while you're driving your car right now. So let's just say a car is $30,000 and you're going to go buy it. Well, there's only a couple of ways you can do that. Number one, you could steal it. Don't recommend that. It could be a gift. That's probably only going to happen maybe once or twice. It's not going to a sustainable way to buy cars throughout your lifetime. Okay. Then the next method is that you can borrow to, or lease. You could lease the vehicle, in which case you never own it until the buyout period. So the owner is not a fool. The owner is obviously making money on that, or they're not going to lease it to you and take a loss. So that person obviously is making money on the deal, the equivalent of interest. So you're paying a premium for the lease, whether you know it or not. Okay, so there's that. The next option is to finance it. Well, you're going to go, you need it now, you don't have the money now. You're going to go borrow someone else's money and pay them for the privilege of driving the car. Very common. That's how the bulk of people are buying vehicles. They're leasing or financing it. The next method is paying cash, which you just identified. But in order to pay cash, you had to capitalize, you had to build up enough value so that you had 30 grand in the bank account that you could drain down to zero. Well, the moment you drain it down to zero, it's gone forever and you've lost all the earning potential. Let's say it took you 5 years to build up the 30 grand. Now you got to go through a period of making payments. You might not do it intentionally. This is where people fall off the rails. But if you're intentional, you should be making at least the same payment that you would have had to make, Wachovia Bank or Bank of America for accessing or Ford credit in order to get that vehicle. Because if you don't do that, when you need the next vehicle, you will not have the 30,000 in your bank account to get it done. And the price went up. So you have to pay yourself interest. So there's enough there to pay for the new price tag, if that makes any sense. So people fall off the rails paying cash because they're not diligent. They're doing randomized savings and it feels like they have money. But as soon as they have enough money in there, they go do something with it. And then when something big happens, they have to actually go backwards and go back into debt. That's the cycle we see people go through. I've been doing this for 15 years. It's very, very common. So you're always making payments on vehicles, whether it's a computer, a vehicle, a family vacation, your annual tax bill, whatever it is that you're doing, you have to set aside a recurring payment in order to accomplish getting that done, or you're borrowing someone's money and you're making a payment to them. In other words, payments never end in our lifespan. It's cash flow. They never end. So if you have to make the payment anyway, what if you could make the same payment or even a slightly greater one, but do it into a system that you control and manage that benefits you financially? And it benefits you in a number of ways. One of those ways is if you die early. And if you die early, a bunch of tax-free money shows up and solves a lot of problems anyhow. That's using the whole life insurance method. So it's similar to paying cash in that you have to build up a reservoir, a reserve, which now is called cash value. And cash value isn't money. It's a representation of value. And to access it, you could collapse the policy. That's not recommended. Or you can borrow against it. That's what collateral is. So then you borrow against it, taking a policy loan. You said 48 hours in a short period of time. You go online, you click a couple buttons, you request the amount, and it lands in your bank account. And then I go down to the car dealer and I pay $30,000 for my car. Now, if I stopped right there and I don't make a repayment onto what I borrowed, would that impact me negatively? The answer is yes, because I wouldn't have the money necessary to go buy the next car or do anything else. So I have to be an honest banker. I have to be diligent with my behavior, which means you have to understand your behavior before you get started. And I have to set up a repayment. Well, what should the repayment be? Well, if I was going to pay Ford credit $800 a month or $750 a month or $325 biweekly, I don't care what the number is. If I was happy to give those guys the money, why on earth wouldn't I pay myself and my family, who I love more than anything in the world, at least more than I was willing to give Bank of America? It's really that simple. And so we have a cash value that's rising and going up all the time. We have a loan balance that's now going down. So this one's going down and this one's going up. Well, the jelly in the sandwich is equity. It's just like your house. House goes up in value with appreciation, which you don't control. In a whole life, it goes up with appreciation, but it's automated and it happens all the time. It never goes down. If you pay the mortgage down, you create equity. Well, you can tap into that equity in only two ways. One is you borrow against it. Number two is you sell the property. But if you sell the property, you don't have a house anymore. It's really that simple. It's no different than leveraging a piece of real estate, except you have way more control, way more autonomy, but it all falls apart if we don't have the right behavior in place. So the foundation that underpins everything is the mindsets that Nelson identifies in his book. And that's where we spend all of our time in training and education with our clients, which we do on a regular basis through monthly webinars. We're now doing Friday open Q&A sessions. We do quarterly group coaching for our clients for 2.5-hour sessions. Those get recorded and posted on our membership site. We're always on the education wheel because there's no such thing as having arrived in knowledge.
Right on. All right. Well said. I think you and I could just keep talking about this and talking about this. I mean, I can give so many examples and personal stories that I did on your podcast. One other thing I want to touch on before we wrap up here in a couple minutes is so that's what I put in that becoming your own banker. Like you said, thinking like a banker, that you're going to have to make those payments somewhere. You're just kind of borrowing against yourself, your own bank that's stored in the whole life policy as opposed to Wells Fargo, and you're making those payments back. And you need to understand that. And if not, get in trouble with you as the bank as you would another bank. The other thing that and I've been practicing that for all these years and have made millions through use of using my whole life policy as an investor. But until I actually heard Jason speak, probably a few years ago, there is another piece of it, which is this infinite banking concept, the IBC concept, that's a little different than just become your own banker in my mind. Because I was already thinking like become my own banker already and using that very successfully, in my opinion. But when Jason introduced the whole infinite banking concept, it was this next level of like, oh, I was using whole life as my bank, but now this is a way to think of family banking system. This is a way, it's the whole next level versus having one policy. But how do you become the banking system with kind of the steward, the one that is the overall banker that kind of oversees the entire bank? But that way, the entire family then can become a lending institution while they're building their own policies. It can be bought at birth for kids or grandkids or something as this really holistic family system. And that would, again, just next level, like, oh my God, I just would have never thought about that. And Jason, of all people, introduced me to this when I saw him speak in events here in Utah. So very quickly, just to continue on, I think we've said this is how you can use whole life as your own lending institution, so to speak. Talk about this other piece, the IBC piece.
So I'm going to give a couple of resources to your listeners that I think will help this, and then I'll expand on it. So two components. Both these resources are some of our books. The first one is called Cash Follows the Leader. Cash Follows the Leader explains what exactly makes this whole life insurance policy grow and its contract and why does it matter. But reason I'm mentioning it, which they can get a free version of this if they go to cashfollows.com. That's cashfollows.com. And whether you're, in Canada or the United States, doesn't matter. This applies to anyone there. There's a case study in here of one of my clients in Edmonton, Alberta, where husband and wife and two kids, two daughters, and it's about 100-year case study. And I show the example of the parents funding the system with four policies. Then they take a passive income from that system in a tax preferred method, or tax preferred meaning they're not paying tax on the income, which is really helpful in a lot of other ways. So it's a supplement to other income sources that they have. They do that for, I think, 26 years or something. They both kick the bucket, husband and wife, and then there's a net tax-free death benefit that pays out. Well, when it pays out, the kids have knowledge and instructions because they've been paying attention through family banking meetings, which I'll talk about in a moment. They know that they're going to take that resource that comes in and they're going to pay off outstanding policy loans on the two policies that they have because they're still alive. And that resets them back to zero. Then they're still young enough. They have a number of years ahead of them. Eventually, they can take a passive income off the policies that their parents started when they were still teenagers. So this is a cycle of planning and thinking intergenerational that Nelson was talking about. And so I have a case study, a real life case study of that inside of this book. So cashfollows.com. Why did I mention that? Well, our most recent book is Don't Spread the Wealth. Don't Spread the Wealth is all about leveraging the family banking system to own the gold, make the rules, and enjoy generational riches. There's an expression, Krisstina, that rags to rags in 3 generations. So this is why leaving money isn't what people actually care about. When how many people sit on their deathbed and say, geez, I just wish I had more money to leave behind. No, they want the time back. So time and the value that you do with that time, the knowledge that you pass, the education and the memories is far more valuable than the money that you leave behind. And I can virtually guarantee you, your kids would say the same thing when it comes to that stage. So what we need to focus on is what is that value system and what are the education pieces, often through stories, because people, for thousands of years, the way information was passed down was through stories. So it's proven to work. So we incorporate that into your family banking meetings. And you make these fun and engaging, happy memories around positive experiences like family vacations, great times and elements. You have ice cream for the young kids. You make sure that they have a treat. You celebrate with a family game afterwards. You all go and do something. You're in a nice location. There's all these elements, sight, sound, smells, etc., that support a positive environment. So discussions about money aren't a pain in the ass. They're fantastic. Those memories will now take them very, very far. And you start to build up over time. I started when my daughter was basically 2.5 years old, reading a book, a Fancy Nancy book to her. And I found an element in that book where she's cracking open her piggy bank to access money to start to talk about this with my daughter. And I said, we access money a little bit differently. We have a family bank. Oh, family bank? Family piggy bank, she called it. And so we started bringing these elements in very early. So now I reinforce what they already know. So when we talk about it, when we add new elements and we build up and we build up and we build up, my kids understand that when we go on major vacations or we do something big as a family, what funds that is the family banking system. And they know that when we access money from it, what happens to happen next is that, Daddy, we have to put the money back in. Well, high five. Why is that? Because we need to be able to use it again later. There's no talk about interest, policy loans, or insurance. None of that matters. The fundamental element that there's a cycle of money flowing through our life like an aquarium. Aquarium is an ecosystem and it can be self-sustaining with some filters. And those filters need to be maintenance every once in a while, but everything else lives in that ecosystem and the water doesn't leave. It doesn't exit. Does that make sense?
Mhm.
So what you're creating is that aquarium of financial energy that won't last and survive without a little bit of maintenance and changing out the filters every once in a while. That's your brain. That's the knowledge that you're providing. That's the ongoing education component of life. But you're doing it in a way where you're incorporating these fun and amazing conversations with your family. Now, in our book, Don't Spread the Wealth, we actually have a guide as a bonus in here that if people have the book, I think you can go to don'tspreadwealth.com. That's don'tspreadwealth.com. You can order it on Amazon. And inside there, that bonus material, which includes several, I think about 4 hours of video, including conversations with teenagers to hear their perspective, is all available in the bonus material. You can download a 15-page guide to hosting annual family banking meetings. It even has sample exercises and things you can do with kids at different ages. Talks about the things you should prepare for your agenda, setting up the right framework and location, etc. And all of that is available to you at no addition. You just get a book and then you have it all at your fingertips. This is the type of resources that we try to provide the people that we serve because I was given marching orders by Nelson, and the marching orders were very simple. We need to grow the 10%. Malcolm Gladwell wrote a book called The Tipping Point. Once you reach 10% of a population in a given environment, then an idea, a concept, something becomes an unstoppable force and it'll filter its way out through everyone else.
Yeah.
And so our goal at the Nelson Nash Institute, which I'm happy to serve on a council with them, and we support their long-term initiatives and the vision of the Nelson Nash Institute, including training and mentoring other advisors, which is a key component of that. The goal is to get to the 10% of financial professionals that are now actively promoting and assisting their clientele with implementing Nelson's concept. Doesn't mean they're not doing other investing and all the other things that they do, but they have a foundational component of behaviors and mindsets connected to well-designed tools, the insurance contract, the whole life insurance contract with a mutual company that's supporting this congruency of long-term thinking and transitional behavior over generations. So if we can get to that 10%, we've got an unstoppable force. And that's really what we're here to do.
Richard, thank you so much, and thank you for your mission. And what came to mind hearing you say what you just said, and I think a way to complete is there's a big system out there that's probably incentivized to not have this type of knowledge and information in the hands of all of us listening. And if that's true, then I would want to say, like, what can I learn? What can I learn? What can I do differently to not be at the mercy of that system that's probably not looking after my best financial interest of me and my family? So thank you. Thanks for doing this work to get the word out because this type of knowledge changes lives, individual lives, and can change generations. And I know your work is so much motivated by those marching orders. So
Thank you so
thank
much,
you.
Christina. Appreciate having me on. And this was a lot of fun.
And I'll be putting links to all of your books and everything's in the show notes to make it really easy to learn more and pick up these books, pick up Nash's books, pick up Jason and Richard's books, and start soaking in this knowledge. And it's not complicated. It's not boring and complicated. It's stuff that is very simple to understand and implement.